Before I begin, I'd like to make a disclaimer. I'm not recommending you to buy or sell any stock featured on this channel. I'm simply sharing my personal point of view. Please remember, always invest at your own risk. Today, I want to talk about a potential 10-bagger stock, Versatile Creative Berhad. Versatile Creative was founded in 2003, initially focusing on printing and packaging. In 2018, NSK Trade City, owned by the Lim family, became a shareholder of the company. After the lawsuit between Lim family and the board of directors of Versatile Creative, the Lim family eventually took control of Versatile Creative. That's the history. Now, I'd like to focus on how the Lim family turned Versatile Creative around. The game-changing moment came in 2020, when VN Trading SDN was incorporated as a joint venture between Versatile Creative and NSK Trade City. Versatile Creative holds 51% of share while NSK Trade City holds the remaining 49%. In 2022, VN Trading launched its first NSK Grocer at Quill City Mall. Since then, more outlets have opened, mainly in second and third-tier shopping malls. Today, there are a total of 8 NSK Grocer stores operating in the Klang Valley. NSK Trade City is already well known in Malaysia as a budget-friendly wholesale supermarket, offering affordable fresh produce, groceries, and household items. However, it is also associated with large crowds, busy conditions, and less than ideal shopping environments. I believe this is why the Lim family decided to establish NSK Grocer, to provide an affordable yet clean and spacious grocery shopping experience. The strategy is smart. By opening stores in second or third-tier malls, NSK Grocer enjoys strong bargaining power to negotiate lower rental rates. At the same time, the outlets are located in high-density and commercially strategic areas, which successfully attract large crowds. Most importantly, the light asset model, renting space instead of owning property, allows NSK Grocer to expand much faster. In contrast, the traditional model of building or buying a property to operate a grocery store is highly capital-intensive. It often requires heavy bank borrowing and slows down expansion. In today's market environment, this older model is less suitable, while NSK Grocer's leaner approach positions it for faster growth. That's why I believe their business strategy is very effective. This is the financial performance of Versatile Creative. Both revenue and net profit have been on an upward trend since the first NSK Grocer opened in 2022. Revenue grew from Rm 54.7 million in 2022 to Rm 375.5 million in 2025, representing a compound annual growth rate of 61.9%. This demonstrates that the NSK Grocer business has successfully transformed Versatile Creative from a loss-making company into a profitable one. Let's look at the latest quarterly results for the period ended June 30, 2025. The reported profit of Rm 719k does not fully reflect the actual earnings of the NSK Grocer business. To break it down further, the non-controlling interest represents the portion of VN Trading's profit allocated to NSK Trade City. From this, we can deduce that VN Trading contributed Rm 2.3 million in net profit, based on Versatile Creative's 51% shareholding. This figure gives a clearer indication of NSK Grocer's financial performance. In Q1 of FY 2026, NSK Grocer generated revenue of Rm 92.2 million and an associated net profit of Rm 4.55 million, translating into a net profit margin of 4.9%. For comparison, Speedmart 99 achieves a margin of around 5.7%, while Aeon records about 2.5%. By this benchmark, NSK Grocer's margin is competitive. I believe this performance is partly driven by its strategy of renting space in second and third-tier malls, which allows for lower rental costs and higher operational efficiency, resulting in stronger margins. However, since Versatile Creative owns only 51% of VN Trading, the portion reflected in its financial statements is Rm 2.3 million in net profit, equivalent to a margin of 2.42%. Breaking this down further, in Q1 FY 2026 there were 7 operating NSK Grocer stores. The newly opened Amarin Mall outlet, which only began operations in mid-June 2026, was excluded as it did not contribute fully to the quarter's results. Based on this data, the average revenue per store was RM 13.2 million, while the net profit per store, on Versatile Creative's 51% shareholding, was RM 331K, projected across a full financial year. This equates to approximately RM 52.7 million in revenue and RM 1.3 million in net profit per store. It is important to note, however, that the latest quarterly report showed a net profit of only RM 719K at the group level, primarily due to an operating loss of RM 2.27 million in the paper products division. This indicates that the Lim family has not yet managed to turn around the traditional printing and packaging business, which continues to drag overall performance. For now, the key driver remains the NSK Grocer segment, as the other businesses contribute only insignificant income. Nevertheless, if the Lim family eventually succeeds in reviving the printing and packaging division, it would represent an additional upside for shareholders. As of September 2, 2025, Versatile Creative's share price stood at RM 0.795, translating to a market capitalization of RM 223 million. This meets rule number 1 of a potential 10-bagger stock, a low market capitalization. Based on the projected results for the full financial year, the 8 NSK Grocer outlets are expected to generate total revenue of RM 421.6 million and net profit of RM 10.6 million, implying a P/E ratio of 21 and an ROE of 9.55%. If NSK Grocer can consistently open 2 outlets per year, projected growth for the coming years would be 25%, 20%, 16.7%, 14.3%, and so forth. However, I hope to see NSK Grocer expand at a faster pace with more than 2 new outlets annually. Importantly, the current PEG ratio is below 1, and ROE is projected to exceed 15% once the business reaches 15 outlets. In view of the above, Versatile Creative meets rule number 2 and rule number 3 of a potential 10-bagger stock, high growth and high ROE. Let's also review some case studies. In 2023, private equity firms reportedly offered RM 445 million to acquire Hero Market, which operated 25 Hero Market and 6 Hero Safe Mart outlets. According to news sources, Hero Market generated RM 840 million in revenue in 2022. Meanwhile, in 2022, Grab acquired Jaya Grocer. Although the financial details were undisclosed, media reports valued Jaya Grocer between RM 1.5 billion and RM 1.8 billion. At the time, Jaya Grocer operated 40 stores across Peninsular Malaysia, primarily in the Klang Valley. Now, looking at the facts, for Versatile Creative to become a 10-bagger, its market capitalization would need to reach RM 2.223 billion. Assuming a P/E ratio of 25, this implies a required net profit of RM 88.9 million. Based on the current net profit per store of RM 1.324 million, this would translate into 67 outlets, a high number that is not easy to achieve in the near term. This is why I always emphasize that spotting a true 10-bagger is never easy. That said, if the Lim family accelerates NSK Grocer's expansion pace, or if Versatile Creative acquires the remaining 49% stake in VN Trading at the right time, the required number of outlets would drop to 34. Alternatively, if Versatile Creative diversifies into new business segments to expand its revenue streams, the growth trajectory could be further enhanced. This is the exciting part of investing. Business is dynamic, not static. When you identify a potential 10-bagger, it is often wise to start with a small position and closely monitor both financial performance and business developments. As results align with expectations, you can gradually increase your stake with greater confidence. As I mentioned earlier, business is dynamic, and it is impossible to know every decision made in company meetings. Therefore, focusing solely on numbers is often meaningless, as investing is more of an art than a science. In my view, SWOT analysis is a better tool to evaluate potential 10-bagger stocks, as it provides a complete picture of the company and its businesses. To elaborate, strengths represent the company's weapons for growth and its competitive advantages. If any of these strengths weaken over time, you need to reassess whether to continue holding the stock. Weaknesses are factors you must monitor closely to ensure they do not worsen or expand. Opportunities and threats are the most important areas to track. Opportunities provide the fuel for exponential growth, while threats can erode competitiveness and even turn a company into a penny stock. Now, let's look at the strengths of Versatile Creative. Its light asset business model, renting non-prime malls in strategic locations, allows for higher profit margins, stronger bargaining power, and faster expansion. The effectiveness of this strategy is already reflected in its financial reports, with healthy profit margins and stable earnings per store. In Malaysia, groceries are an essential and relatively stable business, offering more transparency and predictability than many other industries. Additionally, NSK has strong brand recognition in the value-for-money segment and adopts a competitive pricing strategy that attracts middle to lower-income households. Unlike NSK Trade City, NSK Grocer also offers a wider product range, from affordable to premium goods, enabling it to capture middle and higher-income customers. Finally, leveraging the established supply chain and distribution network of NSK Trade City gives Versatile Creative the ability to expand at a faster pace. The weaknesses of NSK Grocer include low net profit margins and weak customer loyalty. However, this is common in the grocery business, where products are largely undifferentiated and customers remain highly price-sensitive. Hence, operational efficiency is the key competitive factor. Other weaknesses include limited digital presence, geographic concentration mainly in urban areas, and certain operational inefficiencies. Customer complaints on Google reviews often highlight poor service from foreign workers, parking limitations, and cleanliness issues. These are areas that must be monitored to ensure they improve over time rather than worsen. On the opportunity side, Versatile Creative could grow further through strategic acquisitions, such as the remaining 49% stake in VN Trading or the F&B business Cave Rumah from the Lim family. Such moves could significantly boost financial performance beyond organic growth. Expansion potential is also substantial. With only 8 outlets currently, the company is still at an early stage compared to peers. Unlike investing in larger competitors with hundreds of outlets already established, Versatile offers investors a chance to buy in while it is still a small player and grow alongside it. Moreover, inflationary pressures on households and slower income growth are fueling greater demand for affordable groceries, with government initiatives continuing to support the B40 group. Versatile Creative also benefits from the Lim family's extensive experience in the grocery business. Finally, the threats. Versatile Creative faces intensifying competition from other grocers, rising operating costs, especially due to minimum wage increases, potential unexpected events such as boycotts, e.g., the KK Mart case, economic downturns that could weaken consumer spending power, and shifting consumer behaviors, particularly the move toward online grocery shopping, as seen in China. These are potential risks that may or may not materialize, but they must be monitored closely. It is worth noting that Malaysia's grocery retail sector is consolidating, with giants exiting the market, demonstrating how quickly the landscape can change. In summary, investing in Versatile Creative carries both opportunities and risks. Always remember, business is dynamic, not static. Manage your risk carefully when investing. Thank you.